All right. Good evening, traders. Thank you for being here. Tonight's topic's going to be simple chart patterns every trader should know. Oh, sorry about that, Ed. Yep, I hear you. I understand. So, good evening, Steve. Good evening, Lee, Walter, Ron, Rajendran, Emma, Ricardo, Sam F, and everybody else here this evening for simple chart patterns every trader should know. So I want to again thank you for being here. So let's get started, and I'll tell you a little bit about myself. Okay, I've been trading for 20 years, and I just got profitable since they came out with Robinhood, and I've been doing quite well. And with Robinhood because they have low commission. Plus, I've kind of fine tuned my trading, and I've been doing very well since then. So, I run the BYOB Trading Room for hit and run candlesticks, and we do a lot of day trading in there. So, I've been doing this for a while, and I just want to share my knowledge with everybody here. Hi, Gretch. Hi, Lee. Hi, Thomas. And that's it. So let's just start with some of the basic ones. All right. The first one we're going to hit is the PBO. That's the pullback opportunity. Okay. That's used in uptrends. Hey, Lenny. So anytime you get an uptrend and you pull back to the trend line, for me, the trend line, that's my holy grail indicator. Every time it bounces on that trend line, I get, it acts just like minor support. It hits the trend line and it typically just bounces up off of it. Okay, and the second one is the pull up opportunity, and that's used for downtrends because, stocks typically move in kind of like a lightning bolt fashion. They move up and then they kind of, pull back, and then they move way up and then they kind of pull back, and then they move way up again and then they pull back. And then, they just keep this momentum going for as long as, the money keeps flowing into it. So, and the same thing is used for downtrends. They drop, and then they kind of bounce up just a little bit, and then they drop some more, and then they bounce up just a little bit, and then they drop some more, and then they bounce up just a little bit. So every time you got that bounce up just a little bit, that's a pull-up opportunity. And for me, that's an opportunity for me to put on some share size and reshort it, or if it hasn't hit my target yet. Typically, they do that bounce up is every time they hit a support area. And same thing when they pull back opportunity is typically used when they rocket through a resistance area, and then they kind of pull back to that support and it holds, and then they kind of rest, and then they rocket off again. So that's the PBO and the PUO. That's the pull-up opportunity. And this next pattern, it's the simple lightning bolt up and the lightning bolt down. Then we have, I call it the launch pad, fuel up. In other words, you'll see it's actually just a bull flag. It's a bull flag that just goes straight across, kind of like a platform that's just built on the end of a flagpole. It just goes straight. It just goes up, and then it just moves straight over to the right, as if it's leaning on the resistance overhead. And I call that the launch pad. The opposite of that is the mine shaft platform down. in which case you got a stock that goes down and then it moves over to the right, in almost a platform looking fashion, and then it moves down again. Then you've got your wedge up and your wedge down, the bull flag and the bear flag. So I'll show you some examples of all of these here just a second. Let me get this out of the way. All right, so let's start with the lightning bolts. All right, so let me move this up. So here's the lightning bolt up. Notice right here, goes up, pulls back, goes up, pulls back, goes up, pulls back, goes up, pulls back. See, this is my holy grail indicator right there. That's the trend line. And it's nothing special. All I do is I take the lows of these pullbacks, the lowest ones, and I connect them. That's it. There's nothing secret about it. It's just nothing difficult about it either. I just find these lows and connect them. And when I get a pullback to an area that's close to it, I seek that out as an opportunity. And as price starts to confirm that that's a bottom by moving away from it, that to me is an entry signal. So that's like a pullback with confirmation. So you get a pullback with confirmation and you just ride this thing up. Now, this happened to be the SPY, and this was the 2020 low. And you can see how it moves in a zigzag fashion all the way up. There's one example of a lightning bolt. Let me try the next one here. Let me move this out of the way. And the next one. It's another lightning bolt. You can see it a little more clearly. It moves up, comes back, moves up, comes back, moves up, comes back, moves up, comes back. This is IYT. This is the transports. That's a pretty nice run there for the transports. And for me, I don't do anything, but I just take a straight line like this and just kind of connect those lows right there. And that's my trend line. Every time it pulls back, that's an opportunity for me to get long. As long as I see a green candle, I'm looking for it to bounce off of there. I don't want another red candle. That would be very bad. So for me, that's my holy grail. Just find an opportunity, a green candle. See, now that one's red, so it's not ready yet. Now, if I see a green candle, that's when it's a signal for me to get long. Right now, that's red, so I wouldn't buy that. But every time I get a pullback, it's an opportunity for me to get long. And this is what I'm talking about. This right here would be a pullback opportunity right here. Let me get my arrows. And let me try this one. So right here, there's a pullback opportunity. There's a pullback opportunity. This is a pullback opportunity. This one, no, because it's a red candle. As soon as I see green, I want to see green take out some red. Over 50% of that red pullback. For me, that's when I get long in those. There's the IYT. So we'll trash that and take a look at something else. So I'll get rid of that one. And we can get rid of that one. Here's another one. Here's a lightning bolt down. As you can see, every time it gets close to these trend line right here, I could sell it right here. I could sell it right here, here. Now this one's going through, so I just let it go. So remember, I want a red candle to show up, because I don't want to be buying somebody's. I don't want to be selling somebody's buy setup. All right, so there's another lightning bolt, and notice how it kind of moves in that lightning bolt fashion, kind of zig up. Try this one, zig down, zig up, down, up, down, up. See? Just like that, kind of just like a lightning bolt there. So we'll trash that, get that out of the way, and let's try one more. That's the same one. Get rid of those two. Try the next one. It's another one. It's another lightning bolt. Kind of moves up, back, up, back, up, back, up, just like that. That's what I call the lightning bolt up. So as it keeps making higher lows and higher highs, for me, that's a sign to stay bullish with the stock. Now, every time it pulls back to this trend line here, I take my arrows here. For me, it goes up, pulls back. For me, if I see green show up, which it did, that's an opportunity for me to buy in. There's an opportunity. There's an opportunity. Now notice it's consolidating back towards the trend line. It went up so high that it had to cool off. Well, from here to about here. So for 3 months, Walmart had to cool off before trend line came in, and then it gave you another opportunity, and then it gave you another pullback right here and right there. So those are, for me, that's a lightning bolt. That's my trend line. That's what I'm looking for. That's what you want to find, is the trend. Okay, because I'm not very good at picking tops and picking bottoms. But I know a pullback opportunity when I see it. And all I got to do is play these little pullbacks and stick with it. Play that trend till it ends. As long as this keeps going up, making higher highs and higher lows, that's what I'm looking for. So let's hit the next one. Trash that. And get rid of that one. Let's see what else we got here. All right, so now here we got, okay, this is a bull launch pad right into a 3 EMA run. All right, so let's draw in that launch pad. And I think I'll use green because I like green, because this is a bullish one. So I'll get the pencil out, and so here's our flagpole, and then here's our flag right there. So there's your bull flag. All it is we moved up so fast that now we got to cool off and rest. That's normal. That's always normal. Just because it doesn't keep going straight up means the move is over. Just a lot of times you go straight up. You need it to cool off. You want to see it rest. What you don't want to see is for price to go up and then to fall back down like this. That's what you don't want to see. All right? You don't want to buy that. All right? What you want to buy is this right here, where it goes up and then it stays up there. It hangs out in the upper third, well above the midpoint, which would be right about there. It's hanging out in the upper third. To me, when it hangs out in the upper third, that's a bullish sign. Okay? The fact that it's resting and hanging out in the upper third for extended period of time, that's even more bullish. All right? The more rest it gets, the more energy it's going to have to make the next move higher. And as you can see from this bull flag, we got this monster 3 EMA run. Look at this. I mean, every time it came back to the 3 EMA, it bounced up. It went up, 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 up. And what a beautiful launch pad. When I see a launch pad, it's kind of like it leans right up against this resistance line. It's constantly trading right up against it. It's like it'll be right up, right on top of it. They'll almost every candle, even in the hourly, sometimes it'll be on an hourly chart. They'll all stop at this one spot as if that's where the sellers have drawn the line. And as they sit up there, they'll just grind away at the sellers right in this area. And eventually there won't be any more sellers. And then it just takes off like this on this 3 EMA run. All right, so we'll trash that. Let's get rid of this one. Let's try the next one. That was a bull flag. Let's try this one. It's another bull flag. All right, so here's another. See how on this one, this is a bull flag into a launch pad. Notice on this one, notice how all the candles up here, they all kind of end almost on the same spot right there. I mean, they're up there and they're almost in the top 10% here. Okay, so let's say this is your bull flag. This is your point of origin, like right here. And your flagpole went up to here. You're measuring from basically right here all the way up to here. I mean, that's basically in the top 10 or 15% up there, just hanging out and leaning on resistance. Like it's just like the front line of a offense on a football. They're just leaning on those defensive players. They're just pushing and pushing and pushing. And that's what it looks like. It's a launch pad. It stays up there, and the longer this launch pad goes, the more fuel they can get inside that rocket ship to take you up to the next stop. And if you look, we've even got another launch pad being built right above it. So this breaks out from, one bull flag launch pad straight into another bull flag launch pad right up over here. So these are some of the basic patterns you'll recognize and you'll run across. The lightning bolt, the launch pad. So let's try the next one. Okay, now the next one, this is the mine shaft platform down. All right, so what does that look like? Okay, so I'm going to use red because it's a bearish color. And we are with the bears on this one. So here, price comes down. And you look at it right here. Like, quite a few of those candles all end up in this one area. And you can see they're all just, there's no bounce to it at all. It's like a Tom Brady deflated football. It hits the ground and just stays there. There's no bounce to it. It comes down and just thud. That's it. And then it just like in a mine shaft, it just falls on the floor and it just doesn't bounce at all. And as you can see, the longer it stays in there, all right, and then the next move is down. And then you get another bear flag right down here. There's a bear flagpole, followed by, yet again, another bear flag. No bounce. Notice there. No bounce. Now this one did not end up making a lower low. They actually overcooked this one, and we got a flick out right there. Well, probably market conditions changed, but there it is. There's the bear flag mine shaft platform down into another bear flag right there. So there's two examples there of bear flags, and this is a mine shaft where it comes down into the next one. So let's pick up the next one here. Okay, bull flag launch pads. Now this is on a 5-minute chart. Okay, this can happen on a daily chart. This can happen on an hourly chart. It can happen on your 4-hour chart. It can happen on your daily chart. It can even happen on your weekly chart. This one's on a 5-minute chart. I play the 10-minute, and I notice these all day long. So here's the open. SPY runs up. This is today, right here. I'm showing you stuff that actually happened today. Okay, here's your flagpole up. Consolidates over to the right in bull flag fashion. All right, and then it breaks out. Another bull flag. You can see the trend goes up there. Then consolidates over to the right in bull flag fashion. Same thing again. We break out again to new highs. Consolidates over to the right in bull flag fashion. And then we get another breakout up to test the high of the year right there. That's us testing the high of the year. So there's like 3 bull flag launch pads on the 5 and 10 minute time frame right there that happened today. You know, from open all the way up until 3 o'clock. So there's something that happened in the SPY today. If you played those bullishly, you made out very well there. And let's try this one, see what this one looks like. There's the SPY again. This is on your daily chart. Here's the SPY moving up. Consolidating over to the right. Another bull flag, kind of launch pad looking apparatus there, or launch pad pattern, getting ready to pop out for some new highs. But you can see we already tested the highs today. So maybe it needs to cool off for a couple more days. We'll see. I think Google and Microsoft report. I think they reported tonight, so we might get some lift from them tomorrow, but be careful. We got FOMC at 2 o'clock. So just be careful. You want to be careful with your risk. You never know what's going to happen. They like to shake things up around 2 o'clock. So just be careful. So we'll take that off. We'll take that off. And I don't know if we saw this one yet. Yeah, we got that one. Just going to go through these. I'm not sure which ones I've displayed. All right, here's a wedge. All right, this is Broadcom. It's another one we played today. And this is a wedge. You can see here's the bull flag right here. And you can see here's the flagpole up. And then you can see we're wedging out into this flag portion right here. Call it a wedge because it goes up so high and then it pulls back to the trend line. Then it goes up so high and it pulls back to the trend line. So if I erase that, you can see here's the wedge that goes up. And the longer we stay in this bull flag wedge up pattern, the more likely we are to shoot off to the upside. So here's another bull flag, but a wedge up. Kind of a pennant flag is what you got there on AVGO. So let's trash that. And I think I already gave you guys this lightning bolt. Here's another lightning bolt on Octa. Again, you can play this. Every time it hits that trend line, there, gets close, you see a red candle, sell it. There. Just like that. To me, this is the Holy Grail. This is a resistance line. It's the top where sellers have shown me they're going to sell. And they've created this pattern of every time they get up to that level, they're going to sell. And they have. So what's the next pattern? Let's see what we got here. Bear flag. Okay, so this is All right, here's the bear flag without me drawing it in. All right, you can see the flag pull down. You see the flagpole comes down, and then you see over here, you get the extended flag right through there. That's your bear flag. It's a move down, then it stays in the lower third. That's what you want to see. And that's what it looks like on the other one. Here's a bull flag on UIHC. Move up, and it consolidates over, and you get another move up. Big bear flag comes down, consolidates in the lower third. This is Octa. Comes all the way down. Now, even though you don't have a candle in here, you have to draw it in. Just because the candle is missing and it gaps down, you'll see that what I like to do is I draw in my own candle. Okay, so if it comes down, then I put a big red candle all the way down because that's how far it dropped. So here's your flagpole, and then right here, there's your flag. And if it stays in the lower third, then it still remains bearish. And then what do we get? Another flagpole and almost a mine shaft platform right there that failed to break down, and it wound up going up right there. So if this fails to go down, well, obviously it's going up. There you go. They tend to be bearish most of the time. And let's try. Okay, now we're going to start off with some of the other patterns you should know. All right, these are the secondary patterns you should want to know. You got the H pattern and the J hook. All right, so let me hit those. So let's try. Let's try an H pattern. I got one right here. Here we are with a series of H patterns, and I'll trash that. So price moves down, and then it comes back up, and then it usually hits some resistance right there. Notice you have prior resistance there. Well, that's what it did. It moved. This resistance was support. So this moved through support, and now the support becomes resistance. And as we head back towards it, we get this rollover. And then we head back down again. Now as we move through this resistance or support, it becomes resistance again. And you can see the H. You know, if you cut off this, you got the H. You can see the H. There's your H pattern rollover. So then again, you got another one. And you have a little battle, and it continues down. So here's one H, and then here's another H. And then right here, you got a failed H. And then you get a reversal right into a launch pad, which happened to send you right into that 3 EMA run right there. Okay, so here's your H. Comes back, hits prior resistance, and rolls over. There's your H pattern. Now let's go look at a J hook. All right, so here's your J hook. J hook works in almost the opposite way. Okay, so I'm going to get the green marker out for this one. Okay, your J hook moves up, this would be right there. That would be your resistance. Okay? So price moves up through it. The resistance. Now the resistance becomes support. Okay? This resistance now becomes minor support. This is major resistance. Turns into minor support. Because now you're above it. And it comes back. And then it J hooks into a higher high right there. In other words, you can see the J right there. The J comes in and hooks up and goes over the prior high. Okay? Major resistance becomes minor support right here. As you come up through the resistance, you come back and test it for support. Minor support holds, and the J hook takes you higher. That's a J hook. And the way I like to play these is as soon as I retraced 51% of this pullback from here down to here, and I got a green candle, I'm in. That's how I like to play them. Next pattern. Let's go with the M. Here's an M pattern. I'll draw it in for you. And we'll use the red. Price moves up. Price moves back. Price creates a double top. And then price comes back. Now you notice right here in the M, right through here, you notice there was like a battle before. So it created this support shelf right there. So notice the M doesn't quite work out until they've had their battle. The same battle that was done here earlier last month is conducted again this month when the battle is formed right there. After the battle, the victor will wind up emerging on the other side. And this time it happened to be the bears. So the M pattern came up, came down, made a lower high. Notice it didn't take out that high. Pressure on the bears to take out and make a lower low. They came down. They couldn't come all the way down. They had to do battle. There's typically will be a battle. They did the battle, and then they broke through, and then they come down. Just like that. There's your M pattern. How I like to play these, as soon as I get to the 50-yard line, you got this pullback here. As soon as it breaches 51% of it, and then I'm in to go short. That's how I like to play them. That's the M pattern when you recognize it. You're always welcome to ask a buddy if they see it in addition. Say, hey, is this an M pattern? Get yourself a good trading buddy. So here's the M pattern. Let's try the next one. Another M pattern. Comes up. Price comes up. Back to the apex. Comes back up here. Back down. Notice at the apex there's a little battle here. Little battle here. And then we wind up heading further south. So there's another M pattern. All right. And let's look at the W pattern. So here we have pattern comes down. We move up. Quite a bit of consolidation right through here. Notice quite a bit. And then we kind of move down, come back. We do a lot more consolidating right through here. And then we finally emerge on the other side. So there's your W pattern. How I like to play these, as soon as I retrace 51% of this, I like to go long. And I know there's going to be a battle here, and I'm willing to hang out and hold on till we emerge on the other side. So there's the W pattern. And let's see what else we got. Let's see, I did the H pattern, I did the J hook. Now let's do the cup and handle with a J hook. All right, if you notice, this would be our cup and handle right here. All right, I'll go to the green marker. And here's our cup. And then here's our handle right there. So you got a cup and a handle. And if you notice on the cup and handle, it's nothing but an H pattern. Excuse me, a J hook. Okay? See the J hook? It comes in and it finds this was major resistance before. So now it becomes minor support. It comes up and then it J hooks off of there all the way up to the upside. So there's a cup and handle. Usually cup and handles have a J hook in them if they play out and they work out correctly. So what happens is you've got a higher low, pressure on the bears to produce the higher high. And that's how you play that. You've got equal highs, you got a higher low, pressure will be on the bulls. If I said bears, I meant bulls. Pressure will be on the bulls to produce the higher high. So there's a cup and handle with a J hook breakout right there. Now we'll take a look at the head and shoulders patterns, okay? So we did the H pattern, we did the J hook, we did the W pattern, we did the M pattern. I just showed you a cup and handle with a J hook in it, and the head and shoulders and the inverse head and shoulders. Now, if you look at the head and shoulders, you'll find that in the head and shoulders, on the right-hand side, there will be an H pattern. That will be the right shoulder. On the inverse head and shoulders, if you notice, on the right side, there will be a J hook pattern. That will be the right shoulder on the inverse head and shoulders. Okay? So keep an eye out for those. You play them the same way as you would the H and the J. Okay? On the right-hand side, the right shoulder for the head and shoulders will be an H pattern. For the inverse head and shoulders, it will be a J hook. So let's look at those. Here's octa. This is the inverse head and shoulders right here. Okay, so we'll put the head in. This would be our head, all of this right here. So we'll draw that in. There's the head. Right here, this is going to be our left shoulder, and this is our right shoulder right there. So we'll block those two off. Right shoulder, left shoulder. Now when you break the neckline, right across here, as soon as you break the neckline, that's when it's going to take off. So you can see, here's the left shoulder, there's the head. Now when you get back here, typically you'll have the same size battle as you had over here. Your right shoulder will typically have the same size and time frame battle as your left shoulder. Typically, but not always. But if you look at this, let me erase that, and I take my pen, you can see here's the J hook comes up, kind of double dips here into a W pattern, and then it takes off. So there's your J hook. You kind of had like a little W pattern play out inside, but it all wound up being a J hook to the upside. So there's your inverse head and shoulders, and you notice you can define your J hook inside your inverse head and shoulders. How I like to play these, as soon as it gets past the 50-yard line, 50% mark, I like to get in long and ride them up. Got to be a green candle though. I don't like to play red candles long. So there's the inverse head and shoulders. Now let's take a peek at the regular head and shoulders. Okay, this happens to be the SPY from 2022 to 2023. All right, this is the head. It's a daily chart of the SPY in August of 2022 before it made the October lows. All right, so here you can see price moves up through here. There's your left shoulder. There's your head. There's your right shoulder. As we break through the neckline here, notice price comes down, comes back, and checks. This was support and now becomes resistance and checks it for resistance. So now the minor resistance holds, and because it bounces off of minor resistance, it heads to a lower low. And there's your lightning bolt right there. So there's head and shoulders right there. That's a typical head and shoulders play out. That's on the SPY. That happened between August and September of 2022. Now, I haven't been looking at the chat. But I'll take a peek at it now. See if we're still connected. All right, I'm gonna pan my way back. And Gretch says Elliott Wave. I'm not familiar with the Elliott Wave. Ujon Docu, I'm down on that one until the next opportunity. I'll have to take a peek at that, Gretchen. And let me move these out of the way. And let me follow up with you. All right, so let's take a look at Docu. And Docu's bearish. And you're down on that one like you're ready to short it. That looks good. You got a nice bear flag. Look for the breakdown in DocuSign. I like that. Launchpad is always a continuation pattern, or will it be a reversal too? Ricardo, typically the launchpad is, I define the launchpad as a bull flag, continuation of the move higher. Yeah, it's always been higher. Typically, it's most likely higher. You know, I can never say like always and or never, but it's most likely it's going to be higher. Yeah, continuation higher. Hector, what's my exit? Hector, on which one? Hector. If you're still here. On any of them? What is my exit? For me, it's when the 3 crosses over the 8. If the 3 crosses over the 8 on the daily, I'm out. All right? If I'm playing it on an intraday chart, if the 3 crosses over the 8 on a 15-minute chart, then I'm out. That's what I like to use to manage my trades. The 3 crossing over the 8. I'm a much different player or trader than some of you because I'm not afraid to get back in or jump back in, play it twice, sometimes 3 times. I also load up on the way, and I will continue to load as long as I see price moving in the same direction and there's plenty of daylight left in the day. I never thought of a gap as a flagpole. Yeah, I can understand that, Lee. You kind of have to. I like to. I'm not saying you have to, but I like to. If it pops up, I like to draw in the green candle. If it drops down, I like to draw in the red candle. Now, even though price did not trade in that range that it dropped or gapped up over, it would have normally had the market been open or there wasn't enough sellers at the time or buyers to cause that gap and hold it in that place. Thanks, Lee. Thanks, Ed. No problem. It's just is a little bit of a task to come up. I wanted some good examples to show everybody these basic patterns, and I hope you get something out of this because these are patterns you're going to run into. Like here's an M pattern. If you can't see it, there's the apex. Here's the battleground on DocuSign. You'll see these patterns over and over on every time frame from the 2-minute up to the monthly. Just look for them, and the more you trade, the more you're going to recognize them. Oh, yeah, thanks for being... I want to thank everybody for being here, taking the time out to be here. I'm grateful. I don't know if you've ever been in my room, but I'm considered probably the naked trader. I show you everything I'm doing. This is my account I trade off of. I mean, I just show you everything. Every single trade that I take is done right in front of you. I trade right in front of you. I don't hide anything. I explain anything. I take questions on the fly. I like it when you ask questions in my room because I don't know what you don't know, and I don't know what you need, to review. So I mean, and your question is probably going to help one of the other 70 people in my room. So questions are welcomed, and I just trade right in front of you. I don't have any other way to say it. I don't hide a thing. I'm there. I trade every single one of my trades. Here's every one of my trades I took today. And I have losing trades too. There'll be some losers and I have some winners. I just happen to have more winners than losers. And I like to keep it that way. Oh, you're welcome, Gretch. Thanks for being here. How many trades do I take? Lee, I can take a position and work that position all day long. If you go on to, if you go to hit and run candlesticks, let me pull it up for you. You watch the Rivian trade, you see how many times. It's not just one trade. I'm hitting a stock as long as I see daylight and the market's moving in my direction and the stock is moving in my direction. I just keep hammering that stock all day long. I'll be selling into the highs and buying back on the dips. And I ride a 10-minute trend the whole way. Let's see if I got any from today. Give me just a minute. Let me see if I got something from today. Well, I know I had these. See, this is a 10-minute chart. This is me buying, and then I start selling. And then after I sell, I reload, and then I sell some more. So it's not just one trade for me. I mean, when I see what I like, I see an upward wedge. That looks bullish for me. That upward wedge is bullish for me. So I'm looking for it to pop over 251. So all day long, I just look for lows and I keep trading. So I take a lot of trades all day. You can see I'm constantly moving. I'm constantly moving product. You know, if you ever work for a firm, they want you to move the inventory. Okay, why? So that they can make money. This is what I do. I move my inventory, all of it, all day long, because that's what it takes to make money. You can see you got an inverse head and shoulders on this one. I just constantly moving product. Yeah, whenever you work for anybody, whether it's you work at a car dealership, or you're working at a realty office, or you work anywhere you work, whether it's a supermarket, they want you to move the inventory. And that's what I do. Move the inventory all day long. Restock it, sell it. Restock it, sell it. That's what I do all day long. Trade small and trade often. That's how I work. Yeah, Gretch, Rivian's sweet, isn't it? Wow. Yeah, I like it. I consider the launch pad when a stock moves up. I'm just taking this indicator, and you see it like stop right up here, and you see a lot of green candles, and they're all going to the same spot. Where's the SPY? SPY was like a great example today. You know, you see like right there? See how every candle just stops at the same spot right there? To me, that's a launch pad. That's a 10-minute launch pad right there. You just see them, and they're not, and it's not like fading. Every time it comes down, you see the very next candle is a green candle right back up to that high. Okay, and then it comes back down, and you see it gets bought right back up to that high. That tells me they're grinding away on resistance overhead or sellers. So, you know, that's what I see. To me, that's a launch pad. Now this is more of a bull flag. You can see it's got that kind of rounded look, but this to me looks like the launch pad look. I trade on a 10-minute chart, Tom. And my trade is like this. I have a bunch of stocks here. I'm just going to pull some up, and I'll show you what I like to do. All right? I'm going to get the bullish ones because those would be the ones that I would buy. I look at them. I'm on a 10-minute chart. I turn on my 3. All right? And then I turn on my 8. This is what I do all day long. Okay? And I look for a bullish stock, and I've already defined them because they'll get a check mark over here. And then I look for a 3-ace cross, a clean 3-ace cross. Notice this is kind of sloppy. I wouldn't play that one. So I'd pass on that one. And that one never got going because I want a 3-ace cross over VWAP. Sometimes I don't get the over VWAP, and I have to wait for that clean candle to come up over VWAP. VRT. All right? So now you have a 3-ace cross right here. See right there? You're up over. You got a base. Now you break out. You're still attached. I can buy this candle right here. Notice all of these candles are attached to VWAP. All right? But I got the 3-ace cross. So now they break over the top. I could actually buy the end of that candle, and I can ride it up until on the 15-minute chart, the 3 crosses over the 8. Or I see an exhaustion bar. I'll definitely take some profit into an exhaustion bar. But you can see on the 10-minute chart, that's a 3 EMA power trend up. It's almost a machine. Only a machine could do something like that, because fear and greed looks more like this, and this looks more like a machine. You see that 3 EMA run straight to the top. So I take this 3/8 cross over VWAP on a chart like this. These are my bullish charts. These are my bullish charts for tomorrow. And I got one that says ultimate. That says it's already in. See, here's another one. Over VWAP, 3/8 cross. The 3 EMA crosses over the 8 EMA on the 10-minute chart. You see that? You're clear of VWAP. You can buy in and ride it all the way up until it crosses back over. Now, I like to manage on the 15. Okay? Because I like to stay in longer. I have a pretty good success rate, so I'm willing to get out on the 15-minute chart. You know, if you wanted to manage it on the 10, when the 3 crosses the 10 on the 10-minute chart, you know, you do what's best for you. You know, follow your trading plan. You could put half on the 10 and half on the 15. I've seen a lot of times where the 10 will flick me out, but the 15, had I managed on the 15, I would have stayed in longer. The whole trick to trading is to cut your losers quick, but let your winners run. Okay? If I manage this on a 10, sometimes I get flicked out sooner. I don't like that. I want my winners to run longer. So what happens is I like to manage on the 15. That way I'm in a little bit longer. I've seen days where I'm in and I'm actually in the next day. It's still, the 15 still never closed out. And I open up the next day and I'm still in that trade. So I like to manage on the 15 until that 15 crosses on the 15-minute chart, the 3 EMA crosses over the 8. I like to stay in. And it's hard. It's hard when you're up so many dollars not to take profit. But the trick to trading is cut your losers quick and let your winners run. And this is a perfect way for me, and I hope you give it a shot sometime. Do it on paper if you want to. I advise it. See if it works for you, is to manage on the 15 instead of the 10 or the 5. What's my usual stop loss? I move it up as I go along. I see a red candle, I'll put it like 5 cents below it. Red candle, 5 cents below it. Sometimes red candles, I'm buying them. I see a red candle, I jump in. I typically move it up as I go along. $8.43. Steve asked a question at $8.43. I'm sorry, Stephen, I didn't see that. Is it natural to feel overwhelmed with all these patterns? Yes, from the beginning you will be, Steve. Yeah, but they're really quite simple. You know, the inverse head and shoulders is the opposite of the head and shoulders, okay? The J hook is the opposite of the H. The M pattern is the opposite of the W. The cup and handle is just a modified J hook. Okay, you could feel overwhelmed, but the more you trade, the more comfortable you're going to get with it. If you're not in a room, get in a room that calls out patterns. You know, get in a room that says, "Hey, I see an M pattern here. I see a W pattern here. I see a J hook here." I constantly tell my traders, like on the SPY, hey traders, I don't know if you watch my morning videos, but I'll tell them, like, okay, this is what I want to see happen in the SPY. I tell them, like, Okay, I want price to move up over this trend line and bull flag. Okay, and what does it do? It does what I ask. It's doing all the right stuff. And I tell my traders, hey, look, this is doing all the right stuff that we want from it to do. You know, I want it to bull flag here, okay? Because that would show me strength. That would give me the courage to get back into it and keep riding it higher. Because we are up kind of high and we did hit the top side of this channel. So now that we've blasted through the channel, what would I like to see? Well, I'd like to see is bull flag on top. Yeah, but you'll get them if you get into a room that, you know, calls out patterns, that has a lot of interaction. I know Rick's room has a lot of interaction, and Doug's room, and my room. You know, get into a room if you're not in one that has some interaction, and I'm sure you can find some on the web. I urge you to try ours. I mean, we got some great trials Ed posted below or above here for, you know, hit and run candlesticks, right way options, and be your own boss, BYOB. Can an M pattern head and shoulders reverse? Yeah, there's an inverse M pattern and there's an inverse head and shoulders SAS. I'm sorry, Steve, that you felt like I did miss your question. Oh, thanks, Ira. I appreciate that. Gretch did some nice trading on Rivian. Yeah, Tom, I trade off the 10. I enter on the 10 and manage on the 15 based on the 3/8 crossover. That's right. Yeah, I move it up. I just, Hector, I'm constantly moving my stop up. I like to profit on every trade. And I'm not afraid. You know what? You know what's nice, Hector? Is I got this LTA scanner. I wish it would come up. It's not coming up right now. There it is. It's not working. Here we are. Okay, I got this LTA scanner. So, see all these windows? I never run out of plays. Never. Never, ever, ever. So something's not working. I can end that trade. And this one will find a new one. This thing brings me trades, one right after the other. Just it's like having an employee just handing you trades to take. Here, look at Google. Hey, look at Spot. Hey, look at ZTS. Look at 3M. You know, it just brings me trades. Look at Dollar General. All day long, this thing just brings me trades. All day long, from before the market opens until after it closes, it's just handing me trades left and right. So I never have to worry about shutting down a trade for fear that I won't have another trade. There's always a trade out there for me with that LTA scanner. I never ever run out of trades. So that I'm not, the only thing I'm worried about is missing out on the profits, and that's why I switched to the 15. Tom, can I explain VWAP? Yes. VWAP is volume weighted average price, okay? And it starts at the beginning of every day, Tom. All right? And if the first stock sells for $25, then the volume weighted average price is $25. Okay? Now, if the next 10 stocks trade for $30, well, then that volume weighted average price goes up. Okay? You see what I'm saying? Because now you've got 11 stocks You've got 10 that traded at $30 and only one that traded at 25. So you take that and then they average the price up. So it's volume weighted average price. All right, so it's the average price that every share sold for that day. All right? The average price that every share sold for that day. And at the beginning of every day, it starts out at 0. Okay? All right, so I'm going to pan back up here. See where I left off. I'm looking. Bear with me. And Jim asked, do I wait for the 3 to close under the 8 or literally cross under? If it's a downtrend, I want the 3 to cross under the 8. Jim, if it's a downtrend, I want the 3 to cross under the 8. All right. If I'm going to close out a trade, I want the 3 to cross under the 8. And how I check that, Steve? No, Jim. I'm sorry. I meant Jim. How I check that is I just take my cursor, put it on the candle, and you can see over there in the left box, it says 3 period, and then it says T line. If the number where it says 3 period is less than the 8, then that's how I know it's underneath it. If I can't see it visually, I can look in the box and figure it out right there. Okay? For SL, I was more interested on the entry. What's your initial stop loss? Well, I give it room to work out. I don't like to lose more than 1 or 2 bars. 1 or 2 candles, Hector. Remember, I'm taking a 3/8 cross. So I'm looking for the first clean candle over VWAP. And it's got to be green. And it can't be a doji candle, and it can't be a topping tail. And I have entered candles that looked like they were going to run, and they wound up being a topping tail, and I've lost like probably $300-400, and that's what I get for jumping the gun. Okay, so please learn from my mistakes. Sometimes it's not good to jump the gun. Wait for the candle to complete. All right, and that's what happened because I got in, I saw it run, I saw it looked like it was ready to run, and I jumped the gun, and it wound up being a topping tail. And that happens. That's the life of a trader. You trade and you learn. Okay, that was my mistake, not waiting. That was me getting too antsy, couldn't sit on my hands long enough. That's a big problem sometimes with traders. You can't sit on your hands long enough, not being patient to wait for the candle to end to figure out if that's the one you want to enter on. Oh, thanks, Ricardo. Yeah, I thought it would be more valuable. So I spent, a couple hours researching. I should actually start making a library so that I have some much better examples. Thank you, Ricardo, for recognizing my efforts. Tonight's recording will be on YouTube, and my YouTube link is. Let me get it for you. Let me see if I can find it here. Just be patient. I'll be right. I'm gonna get it. YouTube channel right here. Be your own boss. Here it is. I think this is it. I'm going to post it down here. Right here. Okay. There's an updated list of heavyweights since the NASDAQ has rebalanced. I believe there is. And I think in order to find that, I'm not sure if they updated their site yet, but I know Malcolm had a place, and I'm looking for it right now. And I can't find it. But I will include it. If I can't find it tonight, I will include it on this video in the comment sections. All right, so that you can see it. For where they rebalance the weights. If Malcolm was here, he'd share it with you. I know he would. So I'll look for it and get that for it. It'll be on my YouTube page for this video. I'll put it in the comments where to go to find the weights. And let's go to the next one question. Missing a lot of questions. And Ricardo, great job doing it. Yeah. Steve, John, do you trade stocks or options or both? Johnny, I trade both. Jacob, building off of Johnny, do you trade options? How far out do I buy of in the money expirations that I look for? Well, these right here, this I put on a synthetic right here. It all depends on what I see. We're at a prior high. I know there'll be a battle up here. So I put on a bull put spread because we were bullish. And I knew there would probably be a battle, but I wanted to see a red candle first. So I made a synthetic condor. And I did a bear call credit spread up here. And I had a bull put debit spread down here. So... and you can see those were 1 and 0 DTEs. And most of the time I like 7 days. Most of the time I like 7-day options. I like a week in case things run against me. I've got some time to fix it. So I like 7 days if it's indices and I'm in tune with the indices. If it's a stock, I really like, at least 30 days or more most of the time. But I do both. Thanks, Gretchen. Oh, thanks, Lee. Yeah, a lot of things, a lot of times, traders, if you can see time left in the day and it's moving up, stay with that trend until it tells you that trend is over. Because if you get to a target early, think about they might go for another target after that. All right? So think about holding longer. Now, this happened to be a trend day. A trend day is when between the hours of 11 and noon on the 10-minute chart, if everything is up over VWAP between 11 and noon, I call it a trend day. And that typically means we're going to go up all day. If we don't go up all day, we'll probably blast off at the end of day. Okay, but here we got into exhaustion and we hit a target, which was the all-time high for this year. So, you pretty much got to call it a top after you see the red candle. Well, thanks, Lee. Thanks, Brent. Thanks, Hector. Oh, you signed up. You got it. Hey, congratulations, Thomas. Yeah, those trials. What a deal. $24.50. You get 30 days and a whole lot of access. If you get in my room, Thomas, ask me where everything is because I can point out where all the goodies are at. My win-loss rate. I don't even keep track of it, Tom. I started out this account with 32,000, and let me see where I'm at now. I don't even keep track of it. Let me see where I'm at. I still got some spreads on, so I'm probably like around I started out at 32,000 in March. At the very first day of March, 32,000. And I'm probably up to 100. This says 142 right here. But I know it's not that high because I have some spreads on. All right. I think it's only up to like 132. A lot of that is some spreads are in there. So I think I'm up to 100 and either 132 or 135. But I had a monster day today with those spreads. T, awesome. Thank you, T. Thank you, Brent. Thanks, Jacob. Is there a way to detach the trades area so one can see everything that has gone during the day and after the day is over? I don't know what to say, Carol. You can get a recorder, and why don't you just record this whole section all day long? Because I never cover it up. Just buy a recorder and record this whole section all day long. Thanks, VJ. Thanks, Gene. Thanks, Thomas. Thanks, Tommy. Yeah, just get a recorder and record my screen all day long. You'll have a record of everything that trades, every single minute, the whole thing. Thanks, Slim. Slim's great. Thank you, Tom. Thanks, Graham. Thanks, Doll. Thank you. Thank you, everyone that was here tonight. I'm going to call it quits. I want to get a nap. I got to be up at 8 and do another one tomorrow morning. I create YouTube morning videos. If you want to see them, subscribe to my site. You'll get a morning prep video, morning analysis, morning conditions. I talk about what I expect. I give you where I'm bullish, where I'm bearish. And I provide you with a lot of information. So check out my YouTube. Get a trial membership if you haven't had one. If you haven't had one in 6 months, you're eligible to get one again. For $24.50, I gotta say it's well worth it. It's a steal at $24.50. It's a steal. All right, everybody, have a great night. Thank you, Ed. All right, thank you, Ed. I appreciate you being here and helping me out. That was awesome. All right, thanks everyone for coming in. All right, I'm going to shut it down. I'm going to turn off the recorder.